Hello everyone. Today's topic for the video is cause and effect of the BEPS problem. To begin with, let us understand what is BEPS. The full form of BEPS is base erosion and profit shifting. It refers to the tax planning strategy that exploits gaps and mismatches in tax rules to make profit disappear or to shift profits where there is no or low taxation. There is a growing concern in the tax community that taxpayers are structuring their transactions to reduce their tax, which led to a debate whether countries are receiving their fair share of taxing rights. Tax avoidance was the key issue. Taxpayers have been arranging their business in a manner to pay least amount of tax within the four corners of law, which creates a fine line between aggressive tax planning and tax avoidance. Hence, taxpayers may exploit legal loopholes and use legal means to avoid taxes by taking advantage of provisions of tax law or lack of a tax law in a low tax jurisdiction. Due to such aggressive tax planning, the effective tax rate paid by taxpayers has significantly reduced, leading to an erosion of tax base. Some taxpayers even enter into business arrangements for the primary purpose to take a tax benefit. Let us understand the BEPS problem. Every country's government has a right to act in its own interest. However, when it comes to taxing activities which may or may not have a physical location or the activities are mobile in nature, different countries can have different interpretations. In the past, countries have been more inclined towards incentivizing themselves as the preferred jurisdiction of choice for enterprises without considering the harmful tax practices. Such countries have come to be known as offshore havens. This has led to profits appearing in countries which are not consistent with the economic motivation. Let us understand a typical BEP structure by way of a diagram. In the picture, we see a minimization of taxation in market country for local activity or sub which does not pay a lot of tax there despite being a high tax jurisdiction. Now why is that? Because an entity located here can shift its profits to intermediate sub 1 with which the market country has a favorable tax regime. Accordingly, there would be little or no withholding tax required to be levied by the market country on payments from local activity or sub to intermediate sub 1. In the middle of the diagram, we can see that intermediate sub 1 can then transfer such profits to intermediate sub 2 located in another country, which is a low tax jurisdiction. We can see that this structure has resulted in low or no taxation at the level of the recipient in the intermediate country. In this structure, the same techniques used by market country to avoid taxes are also used by the ultimate parent company. The diagram depicts that the structure makes sure that there is no taxation of the low tax profits in the country of the ultimate parent company or headquarters of the group. Let us now understand the adverse effects of BEPS. Due to the BEPS problem, governments have to cope with less revenue and higher costs. One of the major adverse effects of BEPS is that it affects the economy of several countries. Multinational enterprises are able to exploit different tax systems of countries, thereby leading to underfunding of public investment, which reduces economic growth. Further, there is an inappropriate allocation of rights to tax profits of countries, leading to multinational enterprises paying lesser taxes than individual taxpayers. Subsequently, as a compromise, governments have to look towards individual taxpayers to fill their coffers. Many domestic entities also face competitive pressure due to multinational enterprises saving more due to unfair tax advantages. To conclude, it is necessary to understand that while tax is an important consideration, it should not be the primary or sole consideration of doing business anywhere in the world. After OECD released its final action plans on BEPS on 5th October 2015, such loophole practices have come under considerable scrutiny by regulatory authorities. With the help of a stable tax system and collaborative effort between countries, it is the view of the OECD that BEPS can be reduced by closing necessary legal loopholes with the objective of maintaining an even playing field for the taxpayers. Hope this video was useful for you to understand the cause and effects of the BEPS problem. Make sure you like, comment, share and subscribe to our channel. See you in the next video. Until then, zooming out.